Recent econ data sparking conversation surrounding the health of the U.S. economy. And while retail earnings pointing to signs of slowing consumer spending, how concerned are executives really about the possibility of a recession? Joining us now is our markets reporter, Josh Schafer. And Josh, you've been taking a look at some of these earnings reports or earnings transcripts maybe, and I guess the conclusion is not as concerned as they once were.
Yeah, Shauna, I should give credit to all of our friends in Wall Street Research for really combing through these earnings calls, and then I'm just talking to them, right? But I think it was interesting, the team over at FactSet highlighted just simply how many companies are mentioning recession on their earnings call. This quarter it's at 28, last quarter it was at 27. Those are both significantly below the 5 and 10-year averages, and they're significantly below what we saw in 2022. Remember, that was the widely forecasted recession that we never actually got, right? And so I think it's just interesting in this moment right now, the last 2 weeks, we've been talking a lot about recession fears are rising, but the actual executives that run the companies in the stocks that we own and that market participants own aren't actually talking about recession. I thought Nick Colas over at DataTrack, who's been at this for decades and looking at earnings calls, had kind of an interesting take on what he takes away from this. He said largely what this tells him is the very low levels of recession being mentioned is more of a sign of management confidence in the current and near-term future earnings power. Essentially saying that companies bring up recession when they're worried about their own outlook, right? It's, okay, we're cutting sales outlook, we need to talk about something here, and we need to make it look broader than just our own issue. How about that incoming U.S. recession? The consumer's not doing well. You're not seeing a lot of that this earnings season. I think a lot of people know that that's not really something you can use right now because yes, the economy is slowing, but it's not necessarily entering an ultimate slowdown. And so it's an overall positive for companies, right? It's a good sign. If companies feel good about future earnings and they're not using recession as an excuse, that's, I don't know if bullish is the right word, but it's not bad.
It's telling when just a handful of companies mention it because it's indicative to your point that maybe they just have an issue on their own that they're struggling to deal with.
Yeah, I wonder how much of that, though, could potentially change over the next couple of weeks as we hear from more of those retailers. Because you would think that maybe they would be the first here, not necessarily the first, but at least when you take a step back and take a look at the macroeconomic environment right now, many of them are seeing a pullback in their consumer spending. So maybe then they are, to your theory there, more likely to blame a larger slowdown.
It's an interesting point, Shauna. So John Butters over at FactSet, who does a great job going through earnings calls. We don't have this chart with us today, but he looked from the jobs report on, and you've had a couple more mentions. So of that 28, I think the breakdown was 15 to 13. So it was 13 before the July jobs report that, of course, had the unemployment rate tick up to the highest level in almost 3 years. That sort of sparked our concern, right? Since then, you've had a few more companies mentioned. Also, when you think about August and the companies we're hearing from right now, retail earnings really just started. So if you're talking about the consumer, then you're really only getting that read last week into this week. You still have Target to report, other big name retailers to report. So it all kind of depends on what point in earnings season you look at it. Net, we're only at 28. Most of the S&P 500 is done, so we're not going to get anywhere near where we were in 22, and I think that's probably the broad takeaway. And the last thing I'll leave you with, too, is similar trends you're hearing in the labor market. We've heard a lot about slowing in the labor market, actual companies talking about layoffs. That's about in line with what you saw pre-pandemic, and again, lower than 2022. So you're hearing a lot of companies feeling confident, again, in where they are from a management perspective, and not saying, we need to lay off, we need to cut costs. That has not been the narrative we're pulling as we're almost all the way through Q2 earnings.
All right, so overall takeaway, investors should be at least feeling a little bit better, maybe about the macroeconomic environment. Yeah, you know, a little optimism here
It's
to
still
start
summer.
the day. It's 10:15 in the morning.